Hello and welcome to Kitco Mining's Digging Deep, sponsored by Revival Gold with me, Paul Harris, in which we take a deeper dive into mining and exploration news. Joining me today is John Feneck, founder and CEO of the Feneck Commodities Report. John, welcome back to Kitco.
Thanks for having me again, Paul.
Now, John, a bit of a thin week on the news front, with many companies, I imagine, holding tight until after Labor Day on Monday next week and the run into the gold shows in Colorado in September. But before we start talking about what news there is, please note that Kitco Metals and Kitco Media provide news services only and do not offer tax, legal, or investment advice. The opinions expressed are those of the contributors and do not necessarily reflect the views of Kitco Metals. For complete terms and conditions, visit kitco.com. And of course, if you like what you see, don't forget to hit that subscribe button. John, let's start with silver. Vizsla Silver confirmed high-grade mineral continuity, where initial mining is likely to occur during the first 2 years of production at Coppola Central at its Panuco Silver Gold project in Sinaloa in Mexico. Highlights of drilling this week included 6.25 meters, grading 6,270 grams per ton silver equivalent. That's more than 200 ounces per ton in old money. Resource update is due before the end of the year. John, this is looking very good for Vizsla, as this drilling is in an area where it will probably start mining when it eventually brings the project into production. And so that bodes well for shortening the payback period, I would assume.
Yeah, absolutely. I met Michael Connor for the first time actually last year when we were at Beaver Creek. We kicked off the entire conference. The two of us were on a panel together talking about silver and copper and PGMs. And we were at $1 then. We're at $2 now. I mean, the stock has literally doubled in less than a year. But I still think there's more upside in a stock like that has a future.
Now, the stock's doubled on last year. Since the start of the year, its shares are up about 58%. Many gold companies have increased their share price by more than this so far this year. John, what's your view on silver stocks at the moment?
Well, we've talked about this many times, Paul. I will say it again. Silver stocks are extremely frustrating to investors because they see silver finally breaking out, past that $26 magic number an ounce, which was resistance pretty much all of second half of last year. And finally getting over 30, which was resistance for 11 years, and then fading, when we got to around 32.50. So you've got some resistance between 32 and 33 now. But I think the positive takeaway is when it retraced off of that high, it then didn't test 26. I mean, it got close. It was in the low 27s, I believe, maybe high 26s, but it wasn't even like a day before it bounced again. So you're making what we call in technical analysis a higher low on the silver price, which is very bullish. And so I would just tell investors to hang in there and buy on dips where you like the silver company and you may have bought at higher prices, lower your cost basis by putting some orders in here in August or early September when people are generally away on vacation.
The silver price has been bouncing around $29, $30 per ounce for a few weeks now. Is another breakout potentially on the cards?
Well, I think we're going to retest that 32 to 33 level before the end of the year. There's a lot of people that are way more bullish than me. Chen Lin came out this week with a $50 target. My partner on YouTube is Don Durrett, and he's talking $50 before the end of the year. If we have $50 silver, then you would want to be buying silver equities with both hands right now because 50 has only happened twice in history. So I don't really see that happening personally this year. But you don't need to have $50 silver for a lot of these stocks to work, right? I mean, we just bought some Pan American again this week, PAAS. It's literally a top 3 holding in all major silver ETFs in the US, all 3 of them. So when silver inflows come to those ETFs, Pan American's just going to catch a natural bid, in our opinion. So we're trying to measure or temper our portfolio construction with names that are smaller, but also large names like Pan American.
Now, in terms of the silver narrative, John, a key part of it this year has been the market in sort of deficit. There's more demand than there is production. Is there any sort of change to that? What do you think will be the silver narrative between now and year end?
Well, the silver bulls always talk about a huge shortage out there. And if we had that huge shortage, in my opinion, we wouldn't be seeing, $29 silver. We'd be seeing much higher prices. So, I'm not saying I'm negative. In fact, silver is my largest holding. I'm saying that I am patient, and most investors are not patient, right? So you have to be patient with silver. And if you're not, I would suggest buying something else.
That's, I think, very good advice. Patience. A lot of investors in the precious metal space are coming into 8 years of patience now, waiting for the good times to come.
So that's an excellent point, and I'm one of them. So I do understand the plight, but I'm just saying that getting over that 26 level last year that we had as resistance for months and months, and breaking through it this year like butter, that's extremely bullish on the technicals. And so, I really do see a revisit of that 32, 33 level around the corner. So if I missed it on the way up from 26 to 32.50, I'm now buying some of those silver equities that I missed the first time around, right?
Well, let's not hope there's too much longer to wait for better days. Let's turn our attention to gold. This week, Shangin International Gold closed the acquisition of Asino Resources for the Twin Hills project in Namibia. Congratulations to everybody there. Chinese acquisition of a Canadian junior is a hot topic, though. This transaction went through where other deals have faltered. It seems that Africa and or gold is less of a concern for Canadian authorities for Chinese investment than the Americas and or copper. John, do you have any views on this?
Not really. I mean, I have heard that the Canadian market is turning away a lot of deals from a player like China. I mean, look, China's got such a lead already in so many of these commodities that we've discussed over the years, Paul, that they're trying to lock up a lot of these. And it's important and also very good that governments or larger institutions are recognizing their dominance. When you and I were in DC in April at the conference there in critical minerals, a lot of the company CEOs were able to meet with politicians and constituents and get a better understanding of what at least the US government is looking for. And literally, I'd say 8 out of the 10 CEOs I talked to after that said, this is the most interested that I've seen, the government, in terms of giving DOD money, DOE money, like any of that kind of stuff, grants that is, that we've ever seen before in history. So the US is recognizing this. Canada recognizes it. For the rest of the world, we'll see.
Okay, I saw a very interesting chart this morning. Chinese investment is the main investment for about 90 to 95% of countries in Africa. John, since we last had you on the show, gold codes have reported their June quarter results. Any surprises there for you, positive or negative?
Well, when you look at GDX, we have 31% of that ETF is in 3 names. It's Newmont, NEM, Agnico, AEM, and Barrick, GOLD. So all 3 of those were worth watching, and all 3 of them delivered decent earnings. I would say that Newmont was probably the least interesting because their AISC, their all-in sustaining costs, got to 1550 plus, which is higher than the market was expecting. Yet, what did we see? We saw the stock go from the mid to low 40s all the way now to 52. So, I think that's a positive, right? The market is starting to shrug off earnings or metrics like that and say, well, hey, they're still making huge margins here, right? So that's the takeaway, is that the last 3 quarters now being recorded January, April, and July of 2024 have been outstanding for these type of majors. And you're seeing it in the share price of some of them, like an Agnico here at $82, right? I mean, the chart looks absolutely beautiful. So, we own a lot of GDX. It's our 3rd or 4th largest holding. And that's just an easy way to play large cap producers for us.
Now, John, interesting you mentioned Newmont. And many metrics, Newmont is quite, middle of the road, quite average. And the fact that its share price seems to have taken off in the past quarter, the past 2 or 3 months, and I see an increasing number of stock tippers tipping Newmont. The fact that it's coming back, is that an indication that generalist investors are coming back? Because Newmont is the biggest gold company out there. I imagine for a lot of generalist investors, they're going to come to the gold space. They're going to go with the big guys first, the people that are perhaps easiest to name. Is that part of what's happening at Newmont?
It might be generalist investors. It's more probably value investors, whether they're fund managers, hedge funds, whatever, just saying, hey, we've had a 15-year plus run in the broad market and we see gold at 2,500 here and holding the 23 to 2,400 level very, very nicely. And they're saying, where can we get value? Because we missed the gold, bus already. So I mean, Newmont is obviously a nice proxy for that.
Okay, now we're going into conference season in the next couple of weeks with the Precious Metals Summit in Beaver Creek, where you and I will be meeting up, and then onto the Gold Forum in Colorado Springs. John, what do you think will be some of the main talking points at these shows? Will it be debt reduction, shareholder returns, growth, development, M&A? What are you expecting to hear?
Yeah, I mean, we've seen debt reduction through a lot of the larger names already in our sector. I think the Newmonts and Agnicos have done a much better job of managing the balance sheet. The problem has been that they did a terrible job years ago, and investors remember this. And there's distractions such as AI and technology and Bitcoin and real estate doing extremely, extremely well. At the same time, they've been reducing their debt, right? So, I think some of the topics would be more like M&A, excuse me, and just, what can we do differently to raise investor awareness, and what can we do differently to maintain and retain, I should say, the clients we already have. And I think mining companies need to do a better job of that, where they're basically not going out there as much in terms of outreach as they should to existing shareholders. Yes, I mean, they would if they had a Vanguard, a Fidelity, some huge player, right? But someone who might own, a 0.5% of the company or 1%, or just have a big position in general and might be an influencer. I think more outreach has to happen like that. So hopefully we see that kind of activity.
It's interesting you mentioned M&A, John. Recently, we obviously had the relatively large transaction with Goldfields buying Cisco Mining. I want to put you on the spot and ask you, if you compare any assets or any companies, what do you think is a gold deal that you think makes all the sense in the world and should happen?
Gold. Well, certain parts of the world could be consolidated, right? Like when you look at South Dakota in the U.S., I think that's a very mining-friendly jurisdiction. And when you look at the Black Hills, you can see there they've been mining since the 1870s. I mean, this is a prolific area. Wharf was bought by Core Mining, CDE, back in 2015, and I think they paid 99 million US, which at the time the market hated, and they sold the stock off as a result. That's been one of their crown jewels, though. That produces 29% of their gold production, period, end of story. So that has been a great asset for them. However, now you're reaching 10 years of production right next year. So I think you could see some other players in the region try to pick that asset up. Badlands, BLDNF, or Dakota Gold, DC, are right there. I mean, they're within a couple of miles of that mine, and there's infrastructure, and obviously it's permitted, and it's a gold friendly state. So we look at stuff like that and say, we already own CDE, but they have a lot of experience globally. They're not just a U.S. miner, so they could easily sell an asset like that to a Badlands or a Dakota, I think, in time, and be just fine. And Badlands and Dakota would be the winner of that, of course.
Okay, interesting. Now, the gold narrative this year has been dominated by the US Federal Reserve and when and if it's going to reduce interest rates this year. Obviously, this year is now starting to run out, and the expectation is that the interest rate cut is coming soon. Is this already priced in? Will this continue to dominate the gold narrative between now and the end of the year, or will something else be the narrative?
Well, I think it's a combination of things. It's not just September 18th Fed meeting, of course. To me, that's already baked in. It's been baked in for weeks and weeks. So it's do we get a quarter or do we get 50 basis points in terms of the first cut? The CME Fed Watch tool is showing you at recording right now that it's a 38% probability of a 50 basis point cut. So we're seeing a better probability that it'll just be a quarter point, which I'm not sure the market is going to love. And then all eyes will be on Powell in the presser to see what the direction of future cuts may look like. If you looked at his Jackson Hole comments and how they were received by our sector, Paul, that was just last week. I mean, our market loved what he had to say there, which is dovish. But he has to continue to do this September 18th and then again at the November meeting for investors to stay focused, I think, and also for the gold price to remain where it is.
Now, assuming there is that September the 18th interest rate cut, will that have an immediate impact on gold? Will we go much higher than 2,500? Or as you suggested, is that already priced in?
That's already priced in our view. I think you're going to have to see him be more dovish towards November, December, and Q1 cuts and kind of lay out a path for this is the first of multiple cuts, right? That would be a change in behavior for the Fed.
Okay, well, we'll obviously be watching for that with interest. Kitco Mining is going to be at both the Precious Metal Summit and the Gold Forum. So drop by and say hello if you're at those. We've got a lot more to come, but first we're going to take a break for a word from our sponsor, Revival Gold.
Revival Gold, ticker RVG on the TSXV and RVLGF on the OTCQX market, is one of the largest pure gold mine developers in the United States. The company is advancing engineering and economic studies on the Merkur Gold Project in Utah and mine permitting preparations and ongoing exploration at the Bear Track Arnett Gold Project located in Idaho. The company is financed and currently focused on the completion of a preliminary economic study on heap leach gold resources at Merkur and continued exploration along 5 kilometers of underexplored structure at the company's multi-million-ounce orogenic gold system at Bear Track Arnett. For more information, please visit www.revival-gold.com.
John, let's talk about copper, the red metal. BHP's full-year results. On BHP's full-year results call, CEO Brian Henry said that its $39 billion hostile bid for Anglo American earlier this year was never Plan A. Neither is its more recent acquisition of Filo and Jose Maria stakes in the Vicuña district of San Juan, Argentina. Very interesting comment there, John. Wouldn't it be nice to have $39 billion to spend on your Plan B?
Yeah, I'm sure many juniors would be happy with 10 million in the bank. So, it's good to see, large companies like this having talks, if nothing else. But I will say that when you saw Newmont with Newcrest, right, like there was a lot more expectation out of that merger right out of the gate, and it took many months for that to get integrated. So we're still bottom fishing here, Paul, in the junior and mid-tier space where there's so much value versus chasing something that's already run up a lot.
Absolutely. Now, on the Kitco Copper Masters panel last week, Ivanhoe Mines chair Robert Friedland spoke of the Herculean task to develop a copper project. John, does BHP have a Herculean task on its hands with the Vicuña district, given that the projects there are at 4,000 to 5,000 meters of altitude and lack infrastructure?
Neither of those things are good. One of the screens for us is a huge screen for us is infrastructure and jurisdiction, right? And when I talk to CEOs, like you and I talked about U.S. Gold this summer, right? George B. worked in Argentina. He worked in Peru. He's worked all over the world. And now he's working in Wyoming. And he says, John, this is like so easy, for me to be having the idea of building a mine where people can go home at night and there's no crazy things to deal with on the periphery. I can just focus on the project, right? So, but again, for a company like BHP or anyone their size, this is just one piece of the puzzle. So, if anyone has the capability of doing it, it's a major, like that.
Okay, and for those that are wondering, BHP's Plan A is the continued organic expansion and development of its existing properties. And as part of that, BHP also said this week that it will announce its Olympic Dam copper smelter and refinery in southern Australia as it seeks to grow production from the region there from 322,000 tonnes last year up to a possible 650,000 tonnes per year by the mid-2030s. John, I want to put you on the spot and ask a similar question to the gold. Is there if you compare any copper assets or companies, what do you think is an M&A deal there that's screaming to take place?
I mean, there's two that come to mind that we track. One is Denarius, which is a new name for us, DNRSF. That is run by a CEO who used to be an Aris mining director. I know you know Aris very well, Paul. And Segovia is a great project in Colombia. They also have a project in Colombia. So I could see that synergy happening down the road because if you look at Denarius Metals' website, they're talking about that asset being in production 6 to 12 months from now, right? So they're in the middle of a raise right now. The stock is down, but I always tell investors, if you're that close to production, this might be, one of their last 2 or 3 raises before they actually get to production. So, you have to take advantage of these downturns in a stock where there's a near-term future, right? I mean, so many juniors that we talk about are 5 to 7 to 9 years away. The other one that comes to mind is Alta Copper, ATCUF. I just talked to Julio last week. Julio used to be chairman of Faraday. He's now moved from chairman to CEO of Alta. That's why we talked. And, they have a 30+% ownership by Fortescue. And when you see a 30% ownership there, or Aris owns 14% of Denarius, it's like at some point, something's going to happen, right? Copper is going to break $5. We both know that this is going to happen likely next year. And then these companies are going to step up and say, well, let's make a bid for the whole thing. What I don't think the majors understand is that guys like Serafino running Denarius and Julio running Alta Copper are not going to sell cheap, right? Like they're going to continue to develop the project or explore and then try to get a nice premium for shareholders, which is something we look for. Not someone who's willing to do a 20%, 30% deal. That's not interesting to us as shareholders. We want someone who's going to stick it out and get to a better place for investors in 2025 or 2026 when copper prices may be higher.
Okay, John, where is Alta Copper? Where's their project?
Yeah, it's in Peru.
Okay. Now, as custom, we like to end with some drilling results. John, you highlighted Cartier Resources this week. Tell us what they've done.
Yeah, sure. So I followed the company for about 2 years now. I think Philippe is a really good leader. He's not sensational. He keeps it very real. And I think that that probably hurts the stock a little bit, right? Because our sector is known for sensational behavior and press releases that may not be 100% truthful. The release they came out with August 27th, I thought was excellent. They already have about 2.5 million ounces of gold in the ground. That press release to me indicates that they have a much bigger resource, like maybe 3 to 4 million ounces. And that's going to catch the attention of someone at some point in 2024, 2025, with higher gold prices, right? Like 'cause last year with 1,800, 1,900 gold, it's not as interesting. But now at 2,500 gold, I mean, if you look at their cap structure, they've got a huge ownership by Agnico and a huge ownership by O3. That's about 30% of the entire float. So again, going back to what we were just talking about with Denarius and Alta, when you have a couple of majors in the stock like that, it's always more interesting to me to put out, stink bids or just actual bids on a stock like that based on decent results. I think the timing of the results are a little bit rough, right? Because you were just saying at the onset, like most companies will wait for Beaver Creek, but Philippe isn't withholding anything, which is important, right? You have to just put out news when you have it.
And they're exploring in Quebec in the Val d'Or district, so a very important gold district there. I know a lot of companies put out results during the conference season. I sometimes think that's a mistake because a lot of people are so busy with the conferences, they're not looking necessarily at their news flow. So getting out a week or so ahead is potentially a good thing there. For me, also in Canada, Snowline Gold continues to expand the valley footprint with another great result coming out of the Rogue target. They reported 435 meters, grading 1.6 grams per ton gold. That's it for this week, John. I will see you in Beaver Creek in Colorado in a couple of weeks' time. Thank you very much for joining us again.
Of course, Paul. Thanks for having me.
I am Paul Harris, and this is Kitco Mining.